We're very happy about the quarter that we just put up, stabilizing the growth rate. So 11% revenue growth, over 15% operating margin, nearly 16% operating margin for the quarter. That's been a trend that we've obviously been driving for the past year or so around really driving a better balance between growth and profitability. So, we improved our guidance on both revenue growth and profitability for the rest of the year. So we guided to about 12 to 13% operating margin for the full year of FY21. And so we do think that these results are sustainable. And obviously, we want to be able to continue to drive them going into next year and beyond. But we're very happy about the efficiency of the business right now, as well as our ability to go out and serve customers and help them power a new way to work in this very, very dynamic landscape.
And it's that landscape. You talked about some of the tailwinds, Aaron, but some of the headwinds too. Like, listen, like every other tech company, you're dealing with this very unusual, challenging environment and economy that is having an impact. Some softness across your small business segment. How are you dealing with some of those challenges? Are there levers you can pull here to ease some of that pressure?
Yeah, so, the first couple of quarters of the year were definitely, we had to step back and figure out, in this economy, in this market, what could we do to best serve our customer base? And in some segments, we had to lean in to make sure that we were better supporting our customers. In other segments, we saw more growth because in spaces like financial services and healthcare, life sciences, the tech sector, there's still a tremendous amount of economic growth occurring. And so we had to do a little bit of a reset in some of our segments, especially the SMB segment, and we're seeing really healthy pipeline for the second half of the year. But at the same time, we saw very strong enterprise growth among these customers. So we grew our number of big deals, which we measure as deals above $100,000 in transaction value. We grew that by 60% from Q1 to Q2 of this year. So we're happy about the momentum that we're seeing in the business, and we do expect that we're going to continue to drive growth coming into the second half of the year. So right now, we are all hands on deck on supporting our customers and their digital transformation strategies and hopefully really enabling them to have a more secure, more seamless way to work in this environment.
Hey, Aaron, always great to have you on Squawk Alley. And speaking of momentum, I'm sure you want to keep that going. So I want to ask you about antitrust and platforms. There's a lot of controversy right now around app store and retail marketplaces, but some of these same concepts could apply to the enterprise cloud. You got Microsoft, Amazon, Google, Salesforce. All of them have a lot of sway over how partners get included or excluded. Do the platforms have too much power? Do they need oversight?
Well, it's a great question, and obviously very timely coming off the antitrust hearings. And most of that focus was obviously on the consumer tech world, where there's a lot more visibility into social media and search engines, and as such, a lot more energy from Congress. At the same time, though, to your point, in the enterprise segment, you deal with similar questions, which is how do we ensure long-term that you have interoperability between our technologies? If I put my data into one cloud platform, will I have the ability to make that data work with other applications from other cloud technologies? So whether or not there needs to be oversight, that's obviously going to be a big question for the government. What I do think is across the industry, we do need to continue to work on better standards. We need to drive better interoperability between our technologies. I can say confidently that companies like Microsoft and Google and others are working on making sure that we have greater interoperability between our technology stack. And we work with companies like Slack and Zoom and Salesforce and others to make sure that we have that interoperability as well. But there's still a long way to go to really create a seamless experience for the broader customer base out there.
It's Deirdre. Good to see you. And I'm a fan of your Twitter feed, so I couldn't help but notice just minutes before you came on air to talk to us, you noted the Walmart, TikTok, Microsoft news, and you tweeted, "I don't understand business anymore, but this is very fun to watch." Tell us, what do you not understand about it?
Well, sorry, I just had a couple of seconds during that last break and was seeing the news. But I think your the last conversation about this being kind of an unorthodox process, I think was aptly put. This is obviously a very strange environment. I don't think there's been a precedent for this type of acquisition playing out ever. And especially in the back of the antitrust element, you don't have the logical acquirers of this type of social media technology at play. So all you really have are these interesting configurations of maybe not the most classic acquirers of a social tool, and which is causing a lot of questions of what is the long-term strategic nature of these deals, especially for companies that don't have a strong advertising business model or might not have some of the same demographic within their customer base. That being said, all of the players, whether it's Larry Ellison or Satya or Doug at Walmart, I mean, these are all incredibly smart and savvy business people, and so I'm sure that behind the scenes there's quite a deal of strategy going on, but it's certainly fun to watch play out.